Cryptocurrency has come a long way from being a niche internet experiment to becoming a global financial phenomenon. Millions of people around the world now invest, trade, and use crypto every day. But as we look ahead, one big question remains in everyone's mind. Is crypto safe in 2026? In this video, we'll explore the future of cryptocurrency, its risks, opportunities, and what investors should really expect in 2026. To understand whether crypto is safe in 2026, we first need to understand what makes crypto unique. Cryptocurrencies like Bitcoin, Ethereum, and many others are digital assets built on blockchain technology. They are decentralized, meaning no single government or bank controls them. This freedom is one of crypto's biggest strengths, but it's also one of its biggest risks. By 2026, crypto markets are expected to be more mature than ever. Over the past decade, we've already seen massive growth, huge crashes, and strong recoveries. Each cycle has made the market stronger, more regulated, and more widely adopted. Big institutions, banks, and even governments are now involved in crypto in some way. This growing acceptance suggests that crypto is not just a trend, but a long-term part of the global financial system. However, safety in crypto doesn't just mean whether prices will go up or down. It also means security, regulation, technology stability, and protection for everyday investors. In 2026, crypto safety will depend on how these areas continue to evolve. One of the biggest concerns people have about crypto is volatility. Crypto prices can rise or fall by 10, 20, or even 50% in a very short time. This makes crypto exciting but also risky. By 2026, volatility is expected to reduce slightly as markets grow larger and more stable, but it will still be higher than traditional assets like stocks or bonds. So while crypto may become safer, it will never be completely risk-free. Another key factor is regulation. In the early days, crypto existed mostly outside government control. But now, countries around the world are introducing laws to regulate exchanges, protect investors, and prevent illegal activities. By 2026, clearer regulations in major economies like the US, Europe, and Asia could make crypto safer for the average investor. Strong regulation can reduce scams, improve transparency, and increase trust in the system. However, too much regulation could also limit innovation, so finding the right balance will be crucial. Security is also a major issue in crypto. While blockchain itself is very secure, crypto exchanges and wallets can still be hacked. Over the years, billions of dollars worth of crypto has been stolen through hacks and scams. The good news is that security technology is improving fast. In 2026, we can expect better wallets, stronger authentication methods, and more insurance options for crypto holdings. Still, personal responsibility will remain important. Investors who don't protect their private keys or fall for scams can still lose everything. Scams are another big risk in crypto. Fake projects, rug pulls, phishing attacks, and social media fraud have trapped many new investors. Even in 2026, scams will not disappear completely. But with better awareness, education, and stricter rules for exchanges, investors may be better protected than before. This is why learning and doing proper research will always be one of the best safety tools in crypto. Now let's talk about adoption. By 2026, crypto is expected to be used more in daily life. We may see more businesses accepting crypto payments, more apps using blockchain, and more countries launching digital currencies. When adoption increases, crypto becomes more useful, and that adds to its long-term stability. The more people and companies rely on crypto, the harder it becomes for it to disappear. Institutional investment is also shaping crypto's future. Big companies, hedge funds, and even pension funds are slowly entering the crypto space. Their involvement brings more money, more stability, and more legitimacy. By 2026, institutional investors could play an even bigger role, helping reduce extreme price swings and making the market more mature. Technology will also decide how safe crypto is in 2026. Blockchains are constantly upgrading to become faster, cheaper, and more scalable. Ethereum's move to more energy-efficient systems is one example. New Layer 2 solutions and improved networks aim to handle millions of transactions quickly. If these technologies succeed, crypto will become more reliable and easier to use, which increases safety for everyday users. But no matter how advanced the technology becomes, crypto will still carry risks. Governments could ban or restrict crypto in some regions. New technologies could make old systems obsolete. And global economic events could impact crypto prices just like they affect stocks and currencies. That's why crypto should never be seen as a guaranteed path to wealth. So, is crypto safe in 2026? The honest answer is safer than before, but not completely safe. Compared to the early years, crypto in 2026 is likely to be more regulated, more secure, and more widely accepted. But it will still be a higher risk, higher reward asset. For investors, the key is not to avoid crypto completely, but to approach it wisely. Only invest money you can afford to lose. Diversify your portfolio instead of putting everything into one coin. Stick to well-known projects with strong fundamentals. Use trusted exchanges and secure wallets. And most importantly, keep learning because crypto changes fast. Long-term investors should focus on the bigger picture rather than daily price movements. Crypto has already survived multiple crashes and still continues to grow. If adoption and innovation continue, crypto could remain a powerful investment opportunity beyond 2026, but patience and discipline will be essential for beginners. Starting small is always a smart move. Don't chase hype or quick profits. Understand what you're buying and why. Remember that in crypto, emotions can be your biggest enemy. Fear and greed often lead to bad decisions. Another important point is taxes and legal rules. By 2026, many countries will have clearer tax laws for crypto. Investors will need to report gains properly and follow local regulations. Ignoring this could lead to legal trouble, even if your investments are profitable. Let's also talk about stablecoins and central bank digital currencies. Stablecoins aim to reduce volatility by being linked to traditional currencies like the US dollar. By 2026, they may play a bigger role in everyday payments. At the same time, governments may launch their own digital currencies. While these won't replace crypto like Bitcoin, they could change how people use digital money and increase overall trust in blockchain technology. Environmental concerns have also been a big topic in crypto. Energy usage of mining, especially for Bitcoin, has faced criticism, but the industry is moving towards renewable energy and more efficient systems. By 2026, crypto could be much greener, which may improve its public image and long-term sustainability. In the end, crypto in 2026 will likely be a more mature, integrated part of the global economy. It won't be a wild experiment anymore, but a recognized asset class alongside stocks, bonds, and real estate. Still, it will remain a space where smart planning matters more than blind optimism. So if you're thinking about crypto in 2026, don't ask only, can I make money? Ask instead, do I understand the risks? Am I prepared for volatility? And do I have a long-term strategy? If the answer is yes, crypto could be a valuable part of your financial journey. As we move into the future, one thing is clear: crypto is not going away. It will evolve, improve, and challenge traditional finance. Whether it becomes safer for you depends not just on technology and regulation, but also on how wisely you choose to invest. If you want to stay updated on crypto, investing, and personal finance, make sure to subscribe to this channel and turn on notifications. We bring you simple, honest, and practical finance content to help you make better money decisions. Thank you for watching, and remember, in crypto, knowledge is your best protection.